Hey, what's going on, everyone? It is Paul, the 920 Trader. Today is it's Wednesday, 19th of March, 2025. We've got federal funds rates coming out here in about 8.5 minutes. So we're going to see a little bit of market volatility. We're going to stand here um, through the through Jerome Powell. Jerome Powell is going to come on at about 2:30. So 2:30, he's going to come out. My guess is he's going to wear a blue tie. I don't know why that's a big thing, but it is. For some reason, it is a big deal. Anyway, my guess is he's going to have on a blue tie. I don't know. Don't know. A lot of people think it's going to be purple. I think it's going to be blue for that doesn't matter why. Anyway, what you're looking at right now, if you're not familiar with what I do or what we do as a group, we use 920 and major levels to generate those buy and sell signals, and that is how we operate. So as you can see my screen right here, these levels that we have right now, these are major levels. So these are the levels at which we take our trades. So yeah, that's kind of what we do. A few different terms that you will hear thrown around. Um, fishtail. Fishtail. Fishtail is the space between the 9 and 20. This is a fishtail. That's a fishtail. Now, you'll also hear double cross. So double cross happens, like to the downside, this is a double cross candle. Double cross happens when we open above the 9, close below the 20. That's a double cross to the downside. It happens to the upside. Let me show you an upside double cross, because this is an upside double cross. We open right in here. Below the 9, close above the 20. So when those things happen, when we are uptrending, we look for a double cross to the upside through a major level. When we're downtrending, we're looking for a double cross, or at a major supply zone, we're looking for a double cross to the downside at a major level. We use those major levels for obvious reasons, because something in the past has made those a major level, and the result of that is we are much more likely to have either really good support or really good resistance. We can use those levels off of which to take our trades, and by doing that, we're stacking the probabilities in our favor. If we can stack 3, 4, 5, 6 probabilities in our favor, all at the same time, it's basically it's the green light is on everywhere in town. So that's kind of what we're looking for, folks. We always want that green light to be on. We don't need all the green lights in town to be on before we leave the driveway, but at the same time, we like to have some green lights. We want at least a couple. Can you repeat the upside double cross for you? Yes. It's one of our folks. Ask about the upside double cross. There are a couple, folks. Let's talk about 1101, Delane. So 1101, we open, and this is the trade that we're looking for. Again, we're going to use VWAP as a major level. It's either support, resistance, a target, or a major level. We can use it multiple ways. There are obviously strategies around using VWAP. Long to the upside, short to the downside. Okay, so a double cross to the upside. We open below the 9 or right at the 9. We close above the 20. So what we are doing effectively, and let me back up just a little bit. We've got about 5 minutes, a little over 5 minutes before the funds rate comes out. So generally speaking, what you're going to find, and one of the reasons why we use both the 9 and the 20 is that doesn't determine what we do, but what it does is it gives us an added layer of support and resistance. Everything we do as retail traders is based on support and resistance, and if we can add a couple of different things in there to help us along the way, a couple different levels above for support or below for resistance. But again, a double cross to the upside as at a major level does 3 things. You have 3 different levels of risk. So when you double cross to the upside, again, open below the 9, close above the 20. You have 3 levels of risk. Number 1, your risk is your 20. So that's a very low level of risk. Number 2, you have VWAP. So in other words, if the play turns around and closes below 20, if you're very conservative, that's where you close out the trade. If it closes below VWAP, there's another place to take the trade off the table. Or you've got the 9 down here. So you have 3 different, number 1, you have 3 different levels of support. But number 2, you have 3 different levels of risk. If you want to go conservative or a little bit more kind of risky or just really risky, very aggressive. This is not an aggressive move right here. I mean, your total candle, and we trade options, folks. We trade SPY and SPX options. We will be moving towards more different tickers. So we got basically 62 to 84. This is a no-brainer to the upside, 62. But this is a 22-cent candle. Again, the candles that we're seeing today are much, much smaller than we've seen the last. It'll be 4 weeks tomorrow since the market really, really started going bananas. But again, that's a double cross to the upside when we are in an uptrending day. And we were. This right in here, we're in an uptrending day. When we're in an uptrending day and you get a double cross to the upside, again, you're stacking probabilities. That is the trade that we want to take. Now, a double cross to the downside, let's look at a double cross to the downside. This way up here, again, this is a midline. This is a double cross to the downside. So 566 even money, that's a midline. I use major levels, and if I don't have it like a 30-minute zone for a couple of dollars, I'm looking at what are called John Carter pivot points. So what those John Carter pivot points do is they give me a major level. So again, coming right directly out of a major level, double cross to the downside, we opened above the 9, closed below the 20, and at a major level. That is your signal to get in. Now, I'm not taking this trade right in here, only because, we're still kind of bouncing around. Yeah, it's at a major level, but nevertheless, we are still uptrending on the day. And we can look at that 5-minute to kind of prove that point up here. So anyway, nothing up here as of yet. Now that second cross to the downside, generally, I'll take that second cross to the downside. They generally work out much, much better. But anyway, we've got just about 2 minutes. 2 minutes. If this is, and for the folks in the group, I don't think it's anybody's first FOMC day. So again, the federal funds rate is going to come out. So the report is going to come out here in less than 2 minutes. Market should, generally it just goes banana with whatever it says. The expectation is they're not going to do anything from a funds rate standpoint. I don't know, maybe they will, maybe they won't, I don't know. So let's see if we can find something here. No, there's really nothing there. Anyway, it's coming out here in just a couple of minutes, folks. We'll figure out what they said here in just a couple minutes. We're gonna know. I'll check in with the financial juice. The financial juice will tell us pretty much what we need to know, folks. But that's going to happen in just about 1 minute. Again, you can see the counter right over here. This is market time right over here, 13:59 right now. We got 1 minute, folks. And again, if this is your first FOMC day, what you're going to see generally is you're going to see algos. So you're going to see potentially a big move either to the upside or the downside. If you are in a trade right now, when the report comes out and it goes in your favor, you will do very, very well. If, on the other hand, you are in a trade and it goes against you, generally speaking, you probably won't do real well. I don't like to be in FOMC day is kind of my least, or eight every year. It's my least favorite day of the year to trade, only because of the volatility. Now, there have been really, really nice setups today, folks. No question about that. But I just don't like all the volatility, just the craziness, absolute craziness. 10 seconds, folks, 10 seconds. Again, it's either going to go way up or it's going to go way down. No two ways about it. And then we'll pull up Papa Powell, Jerome Powell. And again, 3, 2, 1, algos unite. There it is, right there, folks. There. So that's the craziness that we see right here. I mean, it was just a banger. So again, it's an algo move. That's all it is, right down to 562. All the way up to 564. So $3. We're on a $3 candle right now, folks. Nice shaker outer back to the downside, but absolute madness. Now, here's the thing. Do not take a position on a $3 candle. Don't do it. Don't do it. Just don't do it. It's a good way to get absolutely wrecked. Number one, volatility is really, really high on a candle like that. After the candle prints, if you get a pullback at all, the pullback hurts and the volatility drops just a little bit. Green stick, yes, Drunko. That is a green stick, and I am happy to see you. So again, folks, looking from a volume standpoint, volume is pretty good. It's highest candle volume of the day, as a matter of fact, because number one, the first candle out didn't really do much today. So essentially, we had 62 through 64.98. It's about a $3 candle. Is that right? 62 to 65. Yeah, $3 candle right there, folks. Don't do it. Don't do it. Don't take that position. Tell Trump to stop. Yeah, I know. When, yeah, that's crazy. That's good. So we call that. That's a massive, massive, massive double cross to the upside. We don't like that big, big, massive candle. So yeah. Okay, folks, again, don't take a position on a big candle like this. I don't know what they said. I have no earthly idea. But I'm sure they probably said something along the lines of, we're not going to do anything with rates. We need more data to kind of see, what's going on. Much more data. At this point, 9 strategy, don't. No, we're not using the 920 for anything right now. We are leaving it alone, man. It really is. I mean, a $3 candle, but I mean, what they say, they said we're not going to do anything with it right now. So, and again, it's just an algo thing. If you're on the right side, you do very, very well. But yeah, if not, yeah, probably won't do so well. Market to crash another 20%. Yeah, that could happen. Yeah, it could happen. Jerome Powell's coming out here in just a little bit, folks, in about 28 minutes, so he will do his thing. We've needed it to happen for the last couple of years, man. But we got down to what, just about 350. I remember those days. Going back to the downside. Very, very nice. But anyway, that's just what it's doing right now, folks. It's in a state of flux right now. We're absolutely positively not going to take any of these trades right in here. It doesn't make sense. There's a 0% zero reason to take a trade right here, and potentially there's no signal. There's no signal. So, and again, that's not financial advice, folks. Everything I say is just my opinion. It's not financial advice. I'm just saying, based on these candles right here, yeah, if you're going to take a position, there is a certain risk of ruin. So again, watch your levels, but leave it alone. Leave it alone, folks. It just doesn't make much sense. Anyway, folks, yeah. We got these levels here, and levels mean things, but at the same time, I got nothing. Okay. That's awesome. That is awesome. Got a lame fill. All right, Code. If you're playing this thing, it's potentially it can get you. It can absolutely get you. All right. All right, folks. All right, here we go. Again, nothing to really trade in here, folks. It just doesn't make sense to trade anything. We're going to wait for Jerome Powell. He's sure to say something at some point. $130 Phil called. Hey, good job, Code. You made on a call was $8. Nice, nice, nice. Again, folks, you can play the 920 anyway. I wouldn't. I wouldn't play these moves right here. Their volume. I mean, lots of volume, lots of algos going back and forth, back and forth. And I don't know. I didn't take a look and see. Let's see. No cut. No cut, obviously. All right, so they're going to slow the pace of balance sheet runoff. Maybe June. Fed projections show 4 of 19 officials see no cuts in 2025. 4 see 1 cut, 9 see 2, 9 see 3. Okay, so Fed projections imply 50 basis point of rate cuts in 2025. Okay. All right, and then 50 basis points more in 2026. So, I don't know if you guys remember this, but a year ago, they said we were going to have, or a year and a half ago, before, I think it was one of the last FOMC days of 2023, the Fed came out and said they would likely have about 6 rate cuts going into in the entire 2024. Didn't happen. We had a couple. And then in December, I think it was December 18th or December 19th, with a big the end of year FOMC meeting, and they said they revised it to only 2 rate cuts this year, and the market just started tanking. Well, then it rebounded, and then 4 weeks ago tomorrow, that's when all this business about tariffs, that's when all of that talk started. So again, folks, we're going to wait. We got about 21 minutes until we see Jerome Powell. And I haven't looked at volatility. Let me check volatility, folks. It's one thing we use. Kyle. That's like 50%. Yeah, it's pretty high. It's relatively high for right now. I've seen a lot higher though. Again, this is pretty much a nothing burger. I mean, it's just trading just a little bit higher than it was earlier. So, we are, what are we, 20 minutes in, 15, 20 minutes in. They might come back here in just a little bit. I'm going to stop the recording or stop the streaming right now. See if we can come back here in just a little bit when Powell gets back and have some more craziness. So.